This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's take a look at some of our top stories of the day. SEC Chair Gary Gensler believes the vast majority of crypto tokens and initial coin offerings violate U.S. securities laws. Have a listen.
Those tokens being offered, many of them are offered and sold as security. My predecessor, SEC Chairman Jay Clayton, I think said it well in 2018 in congressional testimony. He said, to the extent that digital assets like, and I think he named Bitcoin, but he said, to the extent that digital assets like initial coin offerings or ICOs or securities. And then he goes, and I believe every ICO I have seen is a security. We have jurisdiction. Federal securities laws apply. I find myself agreeing with my predecessor, Chair Clayton.
Speaking at the Aspen Security Forum, Gensler emphasized the importance of having investor protections codified into law. Meanwhile, HSBC is blocking UK customers from using credit cards to make payments to crypto exchange Binance, quote, wherever possible. The decision follows the UK Financial Conduct Authority's June announcement that Binance was not allowed to conduct any regulated activities in the country. Finally, HODL, a non-custodial Bitcoin marketplace, saying it has to force liquidate some users' contracts to prevent the loss of funds, pointing at a possible security issue. The company promised to publish a report as soon as the issues are investigated and fixed. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently trading at $38,158. Bitcoin is down over 3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
The amount of Bitcoin being held across all exchanges fell sharply last week by about 4%, according to Glassnode data, which is usually taken as a bullish signal for Bitcoin. The thinking goes like this. Traders are removing their Bitcoin off exchanges due to a more bullish outlook on the long-term value of their Bitcoin holdings. As recently as September, a decrease in the number of Bitcoin held on all exchanges came at the same time as a price rally. But the changing dynamics of the market show that as the crypto market grows bigger, relying on just one or two metrics can't always reveal the full story of what's going on. For example, crypto exchange Kraken announcing last week that the drop in their Bitcoin balance was the result of its internal transfers. The drop in the number of Bitcoin held on crypto-to-crypto exchanges was also much steeper than the drop in Bitcoin balances on crypto-to-fiat exchanges since May, which could just signify that traders have changed their preferred trading platforms. And joining us now to discuss is Pantera Capital CEO Dan Morehead. Welcome to the show, Dan. So are you reading into the significance of these exchange outflows? How do you interpret the movement of Bitcoin out of exchanges?
No, I agree. I think you're spot on. The main reason people send crypto to an exchange is to sell it. So when they are no longer sending crypto to exchanges, that means they're comfortable holding it for a long period of time.
There also seems to be a preference for crypto to fiat exchanges over crypto to crypto exchanges. Any idea why?
No, I don't know why there would be a difference right now.
Fair enough. All right. So you have a letter being released on ESG, that is environmental, social, and governance. Everyone is talking about the E, but you have something to say about the S and G.
Yeah, I think that's the issue that's been lost here. There's a lot of talk about the environmental impact. A couple of things to think about there. Many of the newest blockchains don't use energy to provide security. And so the percentage of blockchains that are energy intensive is going down.
We actually have a chart on that.
We're completely missing the social and governance benefits of blockchain. And this is the decline in the energy-intensive blockchains. But if you think about it, the social and governance aspects are wonderful. It's bringing potentially billions of people into a world where all you need to participate in the savings and banking functions that most of us in the developed world are used to is a smartphone. And you can do that much more cheaply than paying the existing remittance or money transfer rails.
So we are seeing this energy-intensive blockchains declining as a percentage of total market cap, and you're saying this is happening because there may be a move from proof of work toward proof of stake on Ethereum and other altcoins?
It is that, obviously Bitcoin was the first blockchain and 100% of the market cap for many years. But then in 2012, other consensus mechanisms were introduced that don't use energy as a security mechanism. And since then, those have been gaining market share. They're about 35% of the market now. And next year, ETH will go to a proof of stake, which is essentially kind of one share, one vote. And that will reduce the energy intensity of the blockchain industry as a whole.
Okay. And focusing on the social and governance of blockchain, you say this will have more benefits for migrants, remittances, refugees, and financial inclusion that you feel needs to be talked about more.
Yeah, the average remittance cost around the world these days is 8%. And for those of us in finance, that's just a number, 800 basis points, whatever. But for the migrant, that's a month's wages. They spend an entire month every year working to pay their remittance company. And once they actually use Bitcoin on their own phone, it'll be essentially free and essentially real time. And in the meantime, there are companies like Bitso in Mexico that help migrants use blockchain and Bitcoin, but they don't actually know what payment rail is transiting under. And Bitso already has 2 million customers using Bitcoin to move money back and forth. And already they have 8% of all US to Mexico remittance going over Bitcoin.
Mm-hmm. I wonder if you could comment on the volatility in Bitcoin that we've been seeing. We saw Bitcoin break 42,000 over the weekend. Now it's back into its trading range, 30 to 40,000. I read that you believe that Bitcoin could hit 700,000 in 10 years. Perhaps you could walk us through this prediction.
Sure. So, Bitcoin is much more volatile than, most of the asset classes we're used to trading. But keep in mind, it's only 12 years old. It's a very young asset class. Every year, it's been declining in volatility. So this bear market's down 55% from April and May. Previous bear markets averaged 83%. So although 55 is a very big number, it's less than we used to do. And I think 10 years from now, when blockchain is an asset class and every institutional investor has a large allocation to Bitcoin and other blockchains, that very broad ownership will allow it to be much less volatile than it has been today. And if you zoom, any disruptive technology like Apple stock or Amazon stock looks hyperbolic when you graph it on a normal price graph. But if you graph it log over a period of time, you see that the exponential growth is much more stable. And with Bitcoin, it's a very disruptive thing. If you graph it in a exponential basis, it's been very steady for a decade. It has some bubbles here and some bear markets there, but most of those come out of the picture after a year or so. And I view it the same here, that we're way below the trend right now. But once the fundamentals reassert themselves, we'll catch back up.
I was looking at your Twitter, and you have a chart on Bitcoin fund inflows relative to price trend. And you tweeted that investing when Bitcoin is cheap is not easy. If you have the emotional and financial resources, go the other way. What do you mean by that?
Well, humans are very pro-cyclical, and that when things are going up, they really want to be in it, especially at the highs when, everyone's talking about Bitcoin. The FOMO devil is whispering in your ear that you need to be longer, you need to get involved. And so we've seen that in the inflows to Pantera Bitcoin Fund. The amount of time Bitcoin spent in each of these price buckets is the gray bars, and they're fairly normally distributed around the mean, the trend. But the amount of inflows has been very much skewed to the pro-cyclical side. So when the markets are at their absolute highs is when a lot of money flows into the funds. And then the flip side is when markets are very cheap, like right now, Bitcoin's 45% cheap to its 11-year trend, that's when it's very difficult to invest because it feels like, everything's going wrong and, all the news is bad. But that's actually the right time to buy. And so
you got to invest
low, selling high
against your emotions for sure. And I saw that the Pantera Bitcoin fund is up over 48,000% since its inception when it launched 8 years ago. So congratulations on that. Dan, we've got to wrap it up, but thank you so much for your time. Appreciate your insights.
Thank you.
That was Pantera Capital CEO Dan Morehead. Coming up, we'll have some more insights from how to earn rewards with a Bitcoin credit card.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
As the company that launched the world's first ever Bitcoin ETF, we at Purpose chose the CoinDesk Bitcoin Price Index, the XBX, to price our assets.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
The Kentucky Department of Financial Institutions has become the 5th state regulator to claim that BlockFi interest accounts violate state securities laws. The company has come under fire on allegations that these accounts violate securities laws because customers pool their funds with the company, which then lends them to generate profit. Nevertheless, amid Bitcoin's rally over the past year, accumulating Bitcoin has been a hot earning opportunity. And joining us now to discuss is Renaud, Laplanche, CEO of Upgrade. Welcome to the show, Renaud. So you offer Bitcoin Rewards, a credit card that pays 1.5% Bitcoin for purchases made. The Upgrade Bitcoin Rewards card has no annual fee, but explain to us the nuts and bolts of earning Bitcoin rewards.
Thank you, Christine. So the Upgrade card with Bitcoin Rewards was really designed for very mainstream consumers who are not early adopters and they might not currently own Bitcoins. But it's really it's an opportunity for them to really sort of dip their toe into the water, and for the very many of them earn and own Bitcoin for the first time. Many mainstream consumers are curious about crypto in general. They hear about it in the news, but they have not necessarily sort of taken the first step to own Bitcoin. It's a bit scary. Maybe they're hesitant to actually buy into it and spend actual money buying Bitcoin. But our thinking and what we've seen as a really strong interest from our customers is that if you have the opportunity to sort of own your own Bitcoin for free, so to speak, or getting it as a reward without putting money at risk, then it really lowers the barrier to owning Bitcoin. It can really be, for many mainstream consumers and families out there, the first step toward a sort of crypto portfolio.
Yeah, and there may be some obstacles that people are not aware of. For instance, you have to hold onto your earned Bitcoin for 90 days before selling it, right? And there could be tax consequences.
That's right. And so the sort of Bitcoin Rewards is really an opportunity to sort of learn about all this. I learn about sort of owning Bitcoins and reporting on potential gains and so on and so forth. Right. Again, without putting sort of money at risk, but like sort of getting familiar with sort of that portfolio, that asset class over time, and possibly benefiting from the upside.
And one of your competitors is BlockFi, which offers the BlockFi Bitcoin Rewards credit card. And there's a wait list. They also offer 1.5% back in Bitcoin on purchases. How is the Upgrade card different?
I think the Upgrade card, like every Upgrade product, is really designed as a responsible and affordable sort of credit product. So we've been offering loans and cards for a while now, and we've just put sort of $7 billion out there for sort of consumers as consumer credit. We're planning on $7 billion in origination just this year. So we've seen a lot of sort of really interest from consumers in the Upgrade product. So we try to price our product reasonably. The Upgrade card starts at 8.99% APR. Most credit cards start in the 12 or 13% range. There are no fees at all. A lot of credit cards have fees. But mostly the Upgrade card is really similar to a buy now, pay later product in the sense that it turns purchases into an installment plan that our customers can pay down over 2, 3, 5 years. So you can choose how quickly you pay down your balance. But it's different from a typical credit card where you would have this revolving balance and you could make a very small monthly minimum payment and really carry over that balance pretty much forever. So I think the upgrade card is really designed as a more consumer-friendly and more responsible product that gives you credit when you need it at a lower cost, but also helps you pay it back quickly.
And Renaud, just finally, one last question. BlockFi is coming under fire throughout the U.S. for the BlockFi interest accounts. So how does Upgrade pay back the 1.5% that it offers? Are there any concerns as crypto firms face stronger scrutiny from regulators?
Yeah, so we have no interest in developing the kind of products that are currently under scrutiny. In our case, it's just a Bitcoin reward. The rewards are credit towards your balance. So again, it helps you sort of pay down your balance. When you sell the Bitcoin, the proceeds come as a credit towards your balance. So again, it helps you pay down your balance faster. I think it's good for consumers.
Renaud, appreciate you coming on the show. The Upgrade Bitcoin Rewards Card is up for signing. That was Upgrade CEO Renaud Laplanche. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.